Bitcoin blasting towards the biggest monthly gain in 3 years over this past February. The cryptocurrency has more room to run, analysts say as well. So here's the big old rocket taking off. This is an article by CoinDesk. Bitcoin is poised to close February with a 44% gain, its largest monthly advance since December of 2020. You can already see it kind of taking off. Here's kind of my thoughts behind it. It's interesting that we are seeing it kind of take off and we haven't seen that pullback yet that we typically see right into the run up and of the halving, essentially, which is going to happen in April. We got about a month left. And I've kind of wondered, you know, if that's the impact from the ETFs and driving that up, and seeing that the alts haven't quite followed with that kind of massive gain, other than, you know, some outside cryptocurrencies, of course, like maybe kaspa or some of the meme coins. It's interesting that we're also not seeing a tight follow-up with the rest of the cryptocurrency market. And that could be due to the fact that, you know, ETFs are locked into Bitcoins primarily. And if we start to see, you know, other ETFs for things like Ethereum, that could change a few things as well. Bitcoin's demand via US listed spot Bitcoin ETFs is met with constrained supply, dominated by long-term holders unwilling to sell, Galaxy's Alex Thorne said. Bitcoin is on track to finish its strongest month since December of 2020. Even with prices hovering near all-time records, this bull market isn't close to peaking, analysts said. The largest crypto asset by market capitalization has gained a staggering 44% in February, piercing $50,000 and $60,000 for the first time in years and hitting a $64,000 high Wednesday. The rally followed a sell the news pullback below 40,000 following the debut of spot Bitcoin exchange traded funds in the US in late January. Bitcoin has a shot at hitting its highest month end price ever. To do so, it needs to top 61,357 by midnight UTC on October 21st, which I believe it actually did. And so that's pretty incredible as it were. February's crypto rally was broad-based, with CoinDesk Desk 20 index advancing more than 40%. Decentralized exchange Uniswap's governance token Uni, decentralized data storage network Filecoin's Phil, and popular meme token Dogecoin were the best performance of the CD20, outperforming Bitcoin's gains. One note I did want to bring up too, as it pertains to Dogecoin and kaspa, is prior to, you know, what we were seeing in the past, or prior to what we're seeing now, I would have expected Dogecoin to actually be ahead of kaspa, showing very, very strong, you know, adoption on the kaspa side of things, which it obviously needs compared to Dogecoin, because they're very, very different coins. One has very quick reduction in emissions, while Dogecoin is a constant inflationary coin, and so that could have an impact over it, but Doge does have the name. So it's interesting to see kind of the effects of that dwindling supply on a brand new coin like kaspa, pushing it way above and past the Doge, at least in my humble opinion from what I've been looking at here. While Bitcoin's price is hovering near its all-time high, some analysts still see future upside. Quote, "We haven't begun to reach the heights this is likely to go," end quote, Alex Thorne, head of firm-wide research at Galaxy, said in a market analyst posted on X Thursday. He argued that the US spot Bitcoin ETFs are a game changer, providing steady and recently accelerating demand for Bitcoin. Meanwhile, some 75% of Bitcoin supply is owned by long-term holders who have been unwilling to sell so far at recent price levels. On-chain transaction volume on the Bitcoin network and retail interest in crypto are still far from levels experienced during prior peaks, Into the Block analyst noted. And that is one thing that is really kind of a game changer at the end of the day that we're seeing from the effect of ETFs, where we aren't seeing that volume of transactions on the Bitcoin network due to the way that ETFs work, and it mainly being paper traded, meaning the funds for the ETF have purchased up all the Bitcoin and then pushing that in separate off chain for each individual investor. And so that's going to change a lot of the way that it affects, of course, the price of Bitcoin, where we see large single transactions coming in more like a store of value going into whatever the ETFs are, and then individuals purchasing through the ETFs. So that really kind of changes the dynamic of cryptocurrency in general. And what we'll have to see is if those transactions actually interpret into, the wider market, and we start to see increase of transactions on Bitcoin in conjunction with that. And if that happens, then really sky's the limit here, at least from what I'm looking at, due to the fact that we do have, unwillingness to sell by large companies. People like Michael Saylor aren't going to go ahead and sell off their Bitcoin. Obviously, he held through this bear market, wasn't really worried as much as other people. And I have a feeling that large investors in Bitcoin aren't going to be scared off to sell, at any given time. And I don't even think that they'll play the market as much as they have previously, meaning I don't think that we'll see them selling at the top of the market near as much, which means we might start to see stabilization of Bitcoin. Of course, for me, if I'm looking at it breaking out of the halving cycle, what I'm waiting for is for those transaction fees to meet the block reward. And seeing that we're seeing the price of Bitcoin skyrocket, but we're not seeing transactions on the network skyrocket, that's still a few years out. Meaning I still think we have 2 to 3 cycles before we start to see equilibrium between transaction fees and block reward. And that means that we probably will still have a few more 4-year cycles where we see a huge bump up, usually about 3x of whatever the previous all-time high was, back down to the previous all-time high, meaning, sometime between 2025 and 2026, we see a skyrocket up to about $200,000 for Bitcoin, and then we see it come back and settle down between the $50,000 and $60,000 range. That would be what I expect. However, this is, outside of what the norm typically would be for the market, and we're starting to see more and more adoption. It's really going to come down to, I think, also what the transactions on the network start to show. Crypto analytics from Swissblock predicted that Bitcoin's current uptrend is just the start for what is to come. I tend to agree. Sustained buying pressure and strong bullish signals from both oscillators and moving averages suggest that Bitcoin is poised for continued upward momentum, Swissblock analysts said in a Thursday report. However, they urged caution against rushing into the market just now. Instead of chasing the market at these elevated levels, a more prudent approach may be to wait for short-term pullbacks for buying opportunities. Now, I'm going to say it. A lot of people won't say this to you, but playing short-term games in cryptocurrency is the fastest way to lose your ass. And so I don't agree with this. I would play the long-term game, put in what you are willing to lose, right? And then go from there. Obviously, as a miner, I'm not even going to suggest that you purchase Bitcoin in the first place. I'm going to suggest that you mine it. And then that way you actually have hardware assets that are appreciating in value along with generating revenue off of the blockchain. And this is where I differ from a lot of other crypto channels out. I get the point. There are a lot of people that say, well, if you would have bought instead of mined, you would have been up this much. Yes, but if the price goes down, not necessarily true, and they rarely take into account the appreciation of the value of the equipment that you've been purchasing. Already, if you've been purchasing, like I have, S19s below $500 for the bear market, you're already up on appreciation of value of the hardware alone. Plus, you get to capitalize on the actual revenue coming from those machines. So it's kind of a win-win overall. It's a little bit more secure, at least how I feel about it in your investment strategies. Now, crypto miners, though, are selling their Bitcoin as reward having looms. This is nothing new. And I think that it's interesting to watch what, outside analysts see from Bitcoin miners and say like, oh, this is abnormal, or that this is, not what we would expect from Bitcoin miners. However, if you guys have been around for a few cycles, you're fully prepared for crypto miners to be selling off that that pre-halving Bitcoin so that they can increase the amount of hash rate they have on the network. So therefore they have basically a better chance at surviving the halving, which is a reduction in the reward they'll be receiving from their miners. And that is just a typical strategy. That's why people have been kind of talking about this pullback, right? Like, are we going to see a pullback in Bitcoin? The wrench that was thrown into the gears was the ETF approvals, which has really changed, you know, what people are expecting from it in general. And I think that it's kind of funny to see it bounce back and forth. And they're like, well, you know, the ETF is what's affecting it, but also, you know, we were expecting miners to hold. I wasn't really expecting miners to hold, were you? Small miners, sure. I get it. At-home miners that are, you know, paying for their power or whatever. But for the most part, home miners aren't going to have a huge effect on the price of Bitcoin in general either. But the number of Bitcoin held in wallets tied to miners has dropped to the lowest since mid-2021, which is actually fantastic news. This means that miners are able to sell off, still maintain their profitability and revenue, and the market doesn't actually tank because the demand for Bitcoin is going up. Obviously, this is good news across the board. And for miners like myself and like a lot of you guys watching the channel, this is fantastic news as well. It means that you can sell and actually pay your power bill without freaking out and thinking you're going to impact the market negatively, which is really what it's supposed to be from the very get-go. Bitcoin miners provide a service. That service is to generate Bitcoin and sell it to the public for investment purposes. Your job as a Bitcoin miner is not to also be an investor from that perspective. In general, you're supposed to provide a service to where you're churning and burning, and that is really what the strategy is supposed to be. It's healthy for the ecosystem as a whole. Impending reward halving and the dry season in China might explain why miners are running down their coin stashes. The number of Bitcoin held by crypto miners has dropped to the lowest level since July 2021 as they run down their coin stashes ahead of the programmed halving. Data tracked by Glassnode shows the estimated number of Bitcoin held in wallets tied to miners fell by 8,426 Bitcoin, which is equal to 530 million US dollars since the start of the year, to 1,812,482,000 Bitcoin. The decline began in the second half of October when miners held over 1.83 million Bitcoin. Miners created valid blocks, adding transaction records to the public ledger or the blockchain. New coins emitted with each block are given to miners as a reward for the work. We already talked about this. Currently, the miners receive 6.25 Bitcoin per block. The having a quadrennial event due in April will reduce that figure to 3.125 Bitcoin, cutting per block reward revenue by 50%. To improve profitability, miners may be using their stored Bitcoin to buy more efficient equipment so that running costs drop, said the Front Financial, the crypto platform based in Toronto, which is exactly what they're doing. That's what I was saying they're doing. And this isn't outside of the norm. This is actually par for the course. Miners may also be inclined to sell in order to better position ahead of the halving, Front Financial said in a Tuesday newsletter. This may involve purchasing more efficient mining equipment due to new economics that the halving will bring. Also, you got to get in, you know, all of the power, all of the, you know, other infrastructure that you need to stay profitable. And that is something that requires large investments. To expect miners to just hold, well, then they're just investors at that point, and then their mining operation will go under. If you're not churning that revenue to increase your mining capacity, then you're going to fail. And that is one thing I think, especially in the GPU mining community, that gets overlooked a lot, right? Where it's like, well, I'm just going to mine and I'm going to hold this. And if you don't hold, well, you're a bad person because you're negatively impacting the market. No, you're not. If the demand for the cryptocurrency you're mining isn't able to handle the newly minted crypto that you're adding into the market, then that cryptocurrency in particular isn't going to survive anyways. And that is really the end of story as far as that's concerned. You're providing a service that is actually supposed to generate transactions on the network and actually prove that that particular cryptocurrency is viable and has demand for it. The prolonged dry season in the southwest of China, which typically extends from October to March and April, could be another reason for the decline in the miners' Bitcoin balances. China accounts for roughly 20% of the total computing power on the Bitcoin network. Miners in some Chinese regions are known to bring online additional hardware during the wet season when hydropower becomes abundant. Conceivably, miners may sell during the dry season to counteract the inactivity of mining hardware, Front Financial said, and I think that's a very important point. Right now, I have a sweatshirt, there's a sticker, if you'd rather have a sticker, t-shirt, premium shirt, all that cool stuff. Really like the new shirt. I ordered a few for myself, and I just had that design finished this week. Eventually, it'll be on the YouTube channel, but that takes a little bit of time, so just give it some time. Proceeds, of course, go to supporting me in the channel, so there you go. And I thought we put some work into it, and I thought you guys might enjoy it. Thanks for watching this clip from the Crypto Mining Show. You can check out the full episode here, and don't forget to subscribe down here as well. You can also check out my crypto mining e-course at sonofatech.com, where you can get a free month of supporter status with a purchase at sonofatech.locals.com. Also, don't forget to check out my merch underneath the video or at shop.sonofatech.com. I'll see you next Tuesday.